Hello and welcome to another update on the DJI Dow Jones Industrial Average Index. What I want to talk about here are the different scenarios that I'm tracking at the moment. The context is unchanged for the Dow Jones. We have started some kind of a correction, which is a little bit more meaningful, and we've now entered the first support zone. I believe I mentioned it in the last video already. I've just slightly adjusted it, the upper support area there, but that was only a marginal change. So what are we dealing with here on this chart? Yeah, so like on many other index charts, we're likely dealing with a fifth wave to the upside overall. Yeah, a fifth wave. That's my preference. Now, in contrast to, for example, the S&P, we haven't actually formed a new high, maybe double top here. Yeah. Triple top even. So that's kind of in contrast to the S&P 500, which has actually formed a completely new high recently. So, and because of how high the S&P 500 has moved, I decided not to really count, and also the Nasdaq, I decided not to really count this as a B-wave rally anymore. So, but on the Dow Jones chart, it kind of makes sense to still keep that as an option on the table, because the Dow Jones has not formed that new high, and it's entirely possible that, let's talk about the white scenario first, right? That the dip, more than a dip, it was a correction after the December swing high, that this was a three-wave move down in wave A. So it's like the first wave, you could say, of a correction. This was just the A wave. This here is now a B wave, which still looks okay as a B wave, I guess. And then we could get a C wave down, and we've actually started a major correction, a major bear market maybe already. Yeah, that would be the white scenario, in which we would break through all the support levels. Also have to break below the lower boundary line of this trend channel in yellow, and then just start this larger correction, which is due for the S&P and the Nasdaq as well. I've been watching for that for quite some time. However, that's just a macro perspective. Obviously, until we really get confirmations and so on the micro level, this is just a potential. And honestly, we have not even broken the first support area, so I think it's a bit too early to confirm something like that. We don't even have a five-wave move down yet. So yeah, it's not necessarily what I would say is the most probable scenario right now. The risk is high for that, and if that scenario should start from anywhere, it would likely be from here. Okay, because the B wave in white can't really go much higher. I mean, yes, B waves can overshoot, but that would actually be very bullish. And normally we would not expect a B wave to overshoot if a bear market has already started, because an overshooting B wave is a sign of bullishness. Okay, so I think that means white is possible, but requires much more evidence. Like, what I would like to see is a five-wave move down that actually breaks below support levels, and just that impulsive move down that we haven't seen yet. Now, I'm not saying that I really want to see that, but this is what we would need to see to validate the white scenario further, which actually could start from here. But then again, because the S&P doesn't show the same pattern, the Nasdaq doesn't, it's not really my favorite here. Now, that takes us to two more scenarios. In the orange scenario, so I'm watching orange and yellow. And the difference between the two is basically this upper support region. So I'm tracking in the orange scenario a fairly direct move to the upside, where we can say this is an A wave, a B wave. We're now in a C wave that could extend. Also here, count is slightly different to what I'm currently tracking on the S&P, but it works. Wave 1, wave 2, A, B, C in wave 3. This could be wave 4. We might get one more high in wave 5. So we've got support between $42,309 and $43,726 here as upper support. Any break below upper support could send us into lower support, in which we would then, however, not watch anymore really for the orange scenario. It would at least reduce in likelihood. That is a scenario in which the A wave already topped. We're in a larger B wave and could still move higher. As long as pullbacks remain corrective, or corrections remain three-wave movements, in other words, the focus can still be on higher prices. In the short term, I would only see this for now as a small corrective pullback. But we have to see how the market over the coming sessions, weeks, reacts to this upper support zone. Yeah, I'm tracking that now as a fourth wave pullback, potentially B wave pullback on other indices as well. So the Dow Jones has only just entered support. So I'm watching this zone here for a potential reaction. Maybe wave 5 starts from here. By the way, if wave 5 in orange starts from here, it would likely be an A, B, C structure. So yeah, this is at the moment what I'm tracking. And in the yellow scenario, the pullback should be A, instead of just be all of the way forward, it would be A, B, C. And then we can restart a rally from the lower support region. Kind of a mixed bag at the moment, because a lot of stocks support the idea of just a wave 4 pullback. Some others of a B wave pullback. So have to see which potential is coming to life there or is playing out. But on the smaller time frame, I mean, this is not yet full 5-wave decline, so I can still call that wave 4. If it turns into 5 waves, it's more likely the A wave of something. Then we get a B wave bounce and a C wave down. For now, I think a sign for at least a local low would be a break above 44,060. And I'm going to add standard Fibonacci resistance zone for yellow wave B to the chart already, even though we probably haven't started wave B yet. But that could be something that maybe starts over the next week or so, which is between 43,990 and 44,830. Yeah, that's the Dow Jones update. Thanks so much. Bye-bye.